What's going on, Money Morning Live? Who's ready for some power profit trades? Over the next hour, we have Tom Gentile coming in to spend the hour with you, filling you in on what's hot. Let's bring him in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades. We got a special edition for you today. You know, I've been telling you all week, this is my top strategy right now. And the top strategy I'm talking about is surge strikes with all this volatility happening. So today what I thought I'd do is, other than our regular scheduled program where we look at markets, we look at charts by request, we take your Q&A, I want to go in and I want to show you something called Brutus. I want to introduce you to Brutus. That is our under the hood look at my software, all right? We're even going to see if we can pick a trade or two out of that as well. So we've got that. And I want to talk about that because that's what you get as access as a member of Operation Surge Strike. Our premium members get access to that. Our lifetime members get access to the software. We got a lot to go through, Eric, before I get into my private room with my members. So, Surge Strike. I mean, golly, could we not ask for a better market conditions right now than this? We clocked 83% return, or 83% winners for January. We got some fantastic setups as we're in the sweet spot right now for the month of February. This is one of those, this particular type of strategy is almost like a feast or famine. And what I mean by that is that when we come into an earnings report or event-driven markets, we just get opportunity after opportunity. And then sometime around the month of March, we do get maybe a potential trade a week. But the real juice starts coming during the sweet spot, which we're in right now. And I expect us to be for the next 2 weeks. So let's go ahead and let's do a quick market update to start off. So we have had some huge corrections off the highs that you saw here on the S&P. And I discussed this Monday, and I discussed it yesterday. So I just want to do a quick review. High, 480 on the S&P. Low, down here near 420. We have bounced up. And, you know, if I were to add, let me add one more thing to this scale, because we've looked at this a couple of different ways. Here's one more way to look at it. Looking at Fibonacci retracements. There's your high, there's your low, all right? And then here we are right now. So today, interestingly enough, yesterday we hit resistance at the 50% retracement. We got above that. So I believe for the short term, we might see some volatility, but running in the opposite direction, running up. Next year resistance for the S&P is 458.96, so close to 459. All right. Volatility you're seeing went high. It has come back down. It's not low, but it's kind of in that Goldilocks area right now in volatility. It's not high. It's not low. It's just right. Just right for what? Just right for particular styles of option trading we'll get into. I'm going to skip the bonds. I'm going to get right to USO, which is doing really the same thing it's been doing this week, is getting a lot of headway resistance up here around 63. 62 to 63, just kind of hanging out. Looks like it's coiling up for a big move, Eric. I'm not sure where oil is going in the future here as far as the next maybe week or so. But I'm telling you, come Valentine's Day, Eric, do you have a special lady in your life or a special someone?
Of course, I have my wife in my life. Yeah, Valentine's Day. I haven't thought about that yet, though.
All right, there's 2 things I want you to do. And those of you that are watching the program, whether you're here or whether you're on YouTube, think about 2 things. First thing you got to do is you got to find something for that special someone. And then the next thing I'm going to be doing is figuring out some bullish opportunity on oil, because the middle of February is when the seasonality kicks in oil. And we can find, you know, I really would love, Eric, I'm kind of a cheap guy. I'd love to have been able to buy it down here. I wish this was flipped around, because then it would look like a great value to me. But, you know, early in my trading and investing life, I got some very good advice from William O'Neill, who was the editor of Investors Business Daily. And so at the time it was called Investors Daily. That's how far back I go with that. And he said, you know what? I don't buy low and sell high. I buy high and I sell higher. And if we take that little piece of advice from William O'Neill, we can add in this technical move here with some seasonality, and we may very well see higher highs in USO and in all the oil products. All right, moving on to gold. Here we go again. Is it up one day? Is it down one day? This thing is stuck in a box, 161 to 174, and we've come way in here, and we're actually in the sweet spot right now for GLD. GLD is getting a little bit of a bullish push this morning, trading right around 169 again. I got to see us get back above and close above 173 because we had a pretty significant drop over three or 4 day time frame last week. This week looking pretty good. We're getting a little bit of that back, right? But that's GLD. Again, I've said it before. Now I don't talk about portfolios a lot on here on the show, Eric. I mean, I like to tell people that you are your best trader, you are your best investor, and you know what works best for you. But for me right now, I have created a significant amount of a position in GLD, right? I use that as what? Maybe it's a hedge against Bitcoin. Maybe it's a hedge against the markets. Maybe it's the fact that it's the quietest thing out there that nobody's talking about. Maybe it's all of the above. Right, so that's me and GLD. We talked about the VIX yesterday, or the forward-looking VIX, VXX, and it too closed down on its lows yesterday. It opened lower. It's getting a little bit of a bump today. I think that has to do with the sell-off of a certain stock that I'm going to share with you in just a moment. But moving into those certain stocks, let's take a look at FAANG Watch one more time. I would be remiss if I didn't go through this because we do have, again, 2 more FAANG reports. One's coming out today. One's coming out tomorrow, both after the close. Let's talk about the first one today. That is Meta Platforms. So Meta Platforms opened higher. All right. It is down near its lows of the day. I wonder why. Well, I wonder why, Eric. Why in the world is Meta going down when it has not released its earnings yet? Well,
Tell us, Tom. I'm not sure.
There's something that happened this morning, and I'm going to share that with you in just a moment. Does have earnings coming out in the next 90 days. It is on the high side. A lot of traders are out there looking at the volatility on Meta and looking at the volatility of those options on Meta. If I were to take a peek at what those at-the-money options look like, and I'm looking at another chart, Eric, so just forgive me here. But, if you look out there right now at the money calls and the money puts on FB, I'm going to call it, trading around 23 points. So the expectations are that this stock is going to be 23 points above or 23 points below in that range. It's going to be in a range that's above or below about 23 points. Now, that can change a lot here in the next couple of hours because I concentrate on what those look like at the close before the earnings come out. 23 points, Eric, represents, I want to say, about a 7% move to the upside or the downside. That's what the expectations are for Facebook/Meta, right? So just throwing that out there for those of you that are thinking about buying call options on Facebook. Think again. It's going to be expensive. All right, you're gonna spend 7%, or half of that on the calls themselves. All right, moving on. Apple already in the rearview mirror, but what's interesting is that after earnings, that we had that jump up, and then the day after that we moved even higher. We're running into a little bit of resistance right here at 175. I actually like this one, Eric. I like this one as kind of an after effect. Because if you look at, for instance, all the volume on Apple has always been high. I mean, you look at some of the lowest volume, you're still talking 40, 50 million shares a day. Then it spiked up to 170. I mean, if you're averaging, you look at this 30-day average, and this 30-day average on volume is somewhere near 90 million, 95 million. And if you go to 170, that's not a big deal. That's not a big deal. So to me, I still think the momentum could be up for Apple, all right? Or at least it would be the strongest in the group. Amazon Here's the one that's reporting tomorrow after the bell, and you can see it too, Eric. Take a look at that. This is what's happened in the last couple of weeks. Down, 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 down around 2,700, back up. Look at that jump, that gap up today. This is yesterday's close. This is today's open. This is where we are right now. Came right back down. So far we've seen Facebook and we've seen Amazon drop really hard off of their opens, 3,100 to I mean, that's a 100-point move in Amazon here in just a couple of hours, just the first couple of hours of trading. That's all because of a stock and not Netflix. Netflix too, gap opened and is trading down on its low of the day. It's because of Google. So Google reported earnings yesterday. Their revenues were okay. Their EPS blew it out of the water. And so Google came in and was trading around 30.30 this morning. I think their high was close to 30.30. Right, let's look and see where that was. 30.30, 93 was the high. The low is 29.10. Right now, 29.21 as of the chart that you see in front of you. But here's the thing. Gap opened, hit new all-time highs. Was at those new all-time highs for what? 10 or 15 minutes? And then the sellers came in and pushed this thing down, and we went from 30.30, again, 29.10. So it's basically 100 points off the high. Wouldn't be surprised if that even moves a little bit lower. What's happening now is you're seeing yesterday's close, and we jumped above these two Fibonacci areas. This is now support. 28.21 is now support for Google. Most importantly, Eric, all of these stocks, minus Meta, minus Amazon, all have one thing in common. The surge is now behind us, and you can see it right here on the graph. Here's the surge, and here's the flush, and they flushed them out with volatility, so a lot of that time premium is now left behind, all right? So, guys, kind of in retrospect, if you look at this, we've had some wild, fast sell-offs. Even when you take a look at Google, new all-time highs, and then boom, the sellers came in. That, in one word, is volatility. But in the last month, it's been on an accelerated scale, much more so than we've seen in the past. In fact, the scales you've seen in volatility since the beginning of 2022, you have to go back to COVID, to pre-COVID, to the February, March areas of 2020. Now, we haven't seen them in that kind of a move, but this is now, I think, the second most volatile month we've seen on record in the last couple of years. Volatility is even hitting mainstream media. So, check out the story on Time Magazine's website. Eric, can you put that up? And what do we got there? What's going on with Time?
Yeah, I'm looking for the Times Magazine. I have one from the Washington Post. Is that the one you want to see?
Well, I mean, you've got it up on the screen there. We can't blame the stock market volatility on COVID-19 anymore. And I just talked about that the fact that, I can't say it any more clearly that, the market sell-off right now isn't because of COVID. COVID's been around for a couple of years. In fact, you would not believe it. I just found out yesterday, my brother-in-law, that dummy, was tested positive. And the reason why I call him a dummy is because he literally, he mouth breathes on everybody. And he's, we tell him, hey, keep your distance a little bit. This guy, he deals with everybody. And then, of course, my wife's upset because, she says, well, you were so close to him. I thought you were kissing him. This was, we had dinner the other night. And I said, maybe I was. Anyway, so she's like, well, do we need to get a test? Do we need to get a test? Because my wife is she's a germaphobe. And I said, let's just find out. Let's just wait a couple of days. I said, we just came out of COVID. You and I had COVID around the holidays. We still got antibodies. We got antibodies. We're good. So, woke up this morning, feel great. This was a couple of days ago. I think we're in good shape. We'll see. She's still get a little bit nervous about it. But, at the end of the day, I told my wife, I go, we can't blame Dondi. That's his Italian name. We can't blame Dondi. I said, if you're going to get it, it's not a matter of if, it's a matter of when. And with the new Omicron 2.0, they're saying now that's even a 150 or a 1.5 times greater chance you're going to get it because it spreads even faster than Omicron. This stuff's coming. Denmark has said they've given up. They said, you know what? We're not locking down anymore. We have 40,000 cases a day. Just open everything up. No masks, no masks, no more. So you're going to start to see countries, I think, just change their tune. And they're going to go from pandemic to endemic because they just can't do it anymore. They realize that now, instead of fighting this, you have to live with it. We have to live with it. And I think, with all the science out there, the worst of it's behind us. Yes, people are going to get sick. Yes, there's going to be some people that are not going to be here because of it. That happens with every disease. And so I say that because the markets are digesting that, and they're saying, well, wait a minute, we can't blame COVID anymore because of these market sell-offs like we're seeing right now. This is not a COVID-related sell-off. This is the U.S. and the world have been on what I like to call a high. We're on a dollar pushing hangover. Money, currency, not just the U.S. dollar. World currencies have been flushed out to people. And so, a lot of folks have said, well, gosh, I don't want to hang on to U.S. dollars. I got to put it into assets. And that's what pushed assets up. What's pushed assets up? Stocks. What other assets have gone up? Commodities, cryptocurrency. You could give cryptocurrency a push on this too. But the thing is that now everyone's waking up from a hangover and we're starting to see a little bit of a fall off. I think we're going to get another move to the upside. And it's going to bring back the meme traders. It's going to bring back these people. Eric, I heard a story yesterday that people are taking mortgages, second mortgages, home equity line of credit out of their home and putting it into the stock market. That scares me. That's something, people were doing that with homes to buy other homes back in 2005. They were doing stating incomes they didn't even have to buy houses, which caused the financial collapse in 2008. Now, I don't think we're on that kind of magnitude, but think about this for a minute. If your home is overinflated in price, and you're now going to take a loan out of that overinflated home price to put into potentially overinflated stocks, could there be a double bubble that could be occurring? Possibly. We're going to see what's going on. We're starting to tighten a little bit. Looks like the Fed's going to raise rates. I think you have to have two big rate hikes for the markets to really react to this. We know the first one's coming, but it's always, what do you not know? It's kind of like if you see a cockroach in your kitchen. Okay, you can stamp them, you could sweep them up and throw them out. It's not the cockroach you see. It's the ones that are under the cabinets. It's the ones that are in dark places that you don't see. If there's one, there's going to be more. And so that's, I think, what we have to focus on going forward. Eric, what other news stories that you see out there? What's going on?
We have a handful of them today. Let's dive into this one right here. It's from the Washington Post. Wall Street loathes uncertainty, and first month of 2022 was threat-studded and unpredictable as investors assessed the Federal Reserve and in store for rate hikes had historically high inflation, the pandemic's grip over the economy, a tangle of rising geopolitical tensions, and a global supply chain in deep distresses. I'll tell you, I feel like I'm reading to the classroom again right now. When I was a teacher right here. All right, so corporate earnings, including blowout performances from Apple and Microsoft, have thus far failed to impress. Wall Street's fear gauge, the CBOE Volatility Index, is up 75% year to date. This is the Game of Thrones market between the bulls and the bears, and as far as the bears are winning, or so far the bears are winning. So yeah, now what do you think of this one? Break it down.
One thing I want to mention to everybody is that when you read something in paper, it is 100% guaranteed to be in the past. I don't see any newspapers to date that helped us to predict, that give us future predictions. So when you see the volatility index up 75% year to date, what they're talking about, for instance, VXX is low at 18, and then it popped that high in the high 20s. That is 75% year to date. What they're not telling you about is what happened this week, where we fell right back down and we're trading back down around 20. So if you want a real year to date, it's probably closer to 10% up now, because just in the last couple of days, we've had a huge sell-off in volatility that we've maybe reached a floor. Again, Folks, it's all about trading opposite of the herd. So the herd looks at this and the herd says, I need to sell. When perhaps maybe we need to be looking at potentially some buying opportunities, or at very best, hedging buys and sells together and finding some smart plays out there. All right. What else do you got out there, Eric? Anything else you see?
Oh, of course, we have another one. Stock market volatility dampens IPO market predictions for 2022. Experts are saying January stock market performance signals a significant shift in the once sky-high expectations for fast-growing companies to go public.
Yeah, so what's happening here, folks, is that, a lot of these companies are thinking they missed their chance on free and easy money. All right, where, we saw some IPOs that took hours and hours to come out because they kept repricing the IPO. They start at 20 and they went, wait a minute, there's so much activity for the stock. We need to price it at 25. We need to price it at 27.5. And so, that was all happening last year. It's almost like the housing market. The housing market, you list your house. Last year, you could list your house. Let's say you listed a house for $500,000. My neighbor in New York had an old 1970 house. I mean, this thing looked like a 1970 house. Beautiful piece of property, beautiful yard he had. But he had an older house, very small. Listed it, I think, for somewhere around maybe $499. And he had 30 people show up at his open house that day. And he told me he had 6 or 7 offers. And the highest offer was somewhere around, I think it was 15% above his price. So he actually sold this house, I believe, for $565 or $570 as is.
That's how it is over here in New York now. Yeah, it's crazy right now.
The IPO market was kind of doing the same thing.
Mm-hmm.
So what's happening in New York now, Eric?
It's the housing market is doing exactly that. You're putting your house up on the market and you're getting day one bids over asking prices. It's crazy. So it's similar. Nice to see how it relates.
It's although you know what, it's going to change, and I'm actually starting to see it. I saw some existing home sale numbers in New York, and they were down 3% for December. Meaning that's not a big move. It could have been because of the holidays. That could be another thing, is that people don't go out and bid on houses in between Christmas and New Year's. And in fact, most people selling houses, if they're living in them, they tell their realtor, don't bother me during the holidays. So that could be part of it. But, January is really going to be the case. But the stock market says, hey, you know what? We got to cool it on these IPOs, because of the big reason is that we could see a potential pullback. Maybe better to kind of ride that out. So Warren Buffett's got some news too, Eric. What's going on there?
Yeah, just a quick opinion from Warren Buffett. Advice for a volatile market is patience pays. So take it slow.
Yeah. And we talk about strategies in a volatile market. Surge strike is one of them. The thing we do with surge strike is we try to get in before everybody starts bidding things up, like real estate. And then we get out when the frenzy's happening. And on the flip side, we look to sell volatility at the height of that frenzy or just after that, and then ride that back down. Okay. That's the plan that we look for. Hey, Warren Buffett's not in the game that we're in. All right. He's in a little bit longer time frame, but we do have high probability strategies that are very much around Warren Buffett's philosophy, which is, I like to be greedy when others are fearful, and I like to be fearful when others are greedy. And guys, that pretty much sums up surge strike. That's pretty much what it means. I mean, at the end of the day, I love the volatility because I know I have a system, I have a group of patterns that work to the upside, they work to the downside. That's part of the reason why we designed Operation Surge Strike and the software behind it, which is used to specifically scan for the type of environment that we're going into and coming out of right now. And I think, today, Eric, I want to open up Surge Strike, and I want to show everybody code name Brutus. And Brutus is what we call our brute algorithmic trading strategy. So let's talk about Brutus. And so what is Brutus? Well, it is an algorithm We design it for a couple of reasons, but let's talk about one of them, speculative surges, because the markets, when we trade inside of a certain time frame, let's call it 30 days or less, we're in the speculative time frame. We're speculating that prices will go higher based on what it is that we are buying. And what Brutus does is it looks to spot those opportunities before they occur, right? We came up with this because I've learned, I don't know about you, Eric, but I've learned that it does not make sense to trade on emotion. Emotion doesn't work. It doesn't work for me. I'm not going to say it doesn't work for you. It didn't work for me. And so, what I'm not saying is I don't hit 100% winners, okay? But based on my patterns, based on the patterns we have that are designed by Brutus, these are patterns that are consistently winning in the past, and therefore that's the pattern I'm going to take when it presents itself. So there's a couple of trigger events that we look at, and I want to talk about those trigger events now. So we call these code name trigger events. Brutus has 3 trigger events that we look at. I'm going to show them to you in the software, but for the sake of argument, our first trigger event is what we call the initiation point. That's where we jump in, and it kind of gives us an idea of how far in advance that trigger event is going to happen and where we want to get in on the sweet spot based on when the surge starts. Second is the magnitude of that predicted move. Now, what we do is we look at past events, and we average out those past events to get an idea of where that next event is likely to go. And then finally, we look for a termination point, when to get out when everybody else is climbing in. So once again, trigger event is when we're going to begin. We want to get in ahead of that wave. Next event is the magnitude, how far the surge is likely going to go. And finally, we look at the termination point, and that is basically when the surge is going to end. So we programmed the software I'm going to show you to consistently scan the marketplace. And we look at roughly, we look at just tons of events on about 3,000 companies. So that's a lot of data, Eric. I would say about 1,000 trigger events that happen on average per month. So roughly 50 a day. And so of those 50 a day, what we do is we scan through. Does that give us 50 opportunities per day? Absolutely not. We scan for only the best. We scan for events that have a 75% or higher historical win rate. And then we're also looking for events that have what we call positive, that positive surge, meaning that the more positive that surge, the better it looks. So there's that. Now, because our algorithm looks at options and not stocks. See, this is the part where, Eric, where we kind of separate ourselves from the pack. There's a lot of software programs out there that will go out and analyze stocks. And they might say, here's a buy point, here's a sell point based on a MACD. That's a stock. The problem with something like that is, first of all, depending on what you're using, some indicators lag more than others, which means by the time you get in, the move may have already been made. And the second thing is that if you're looking at stock prices only to trade options with, you're in the first dimension of options trading. You're only looking at price. You're not looking at time. You're not looking at volatility, and you're going to lose money. So what we do is we look at option Greeks and we back test based on past option events, not so much the stock. So we're looking at delta. We're looking at theta. All right, delta is basically the move in the stock and how it equates with the move in the option. Theta is a Greek that refers to time decay. And of course, vega, which is our volatility-based Greek. So when we get the very best trigger events, Eric, that's when we jump in. And so I think what I want to do right now is jump into strategy session, and I want to show everybody how we play these trigger events.
Yeah, and I'm gonna help take people through that as well, because we do have a couple of trigger events that you've already brought up. So let's kind of go through them. We have the 4 Jan 13 profit alert, and after I kind of take people through it right here, we can take them through it, or you could take them through it over in the charts. So Ford Motor rose as surge strike predicted, and today our call option just sold for a double. You should be out by now, but if not, please take the following action. Sell to close the January 21-22 2350 call at the limit price of $2. So I'm going to come to you, Tom. You could kind of take us through it on the charts.
Yeah, so what we were looking at was a surge strike that happened way over here. All right. We've got, again, Ford is going to be reporting earnings in a day. We didn't even have to wait until the actual day that the event happened, because we ended up getting out. We hit our target and moved on. And you can see what's happened here, that, getting into this event, we're down here at this area, and it was basically 2 days. A couple of days was all it took for our Ford calls to be profitable. So, Eric, you got any more for us so we can show as examples? The big thing is look at the volatility. Volatility had gone from basically the mid 40s all the way up into the 70s before starting to pull off today.
I got more for you, Tom. So let's bring in this next one right here. The Uber Jan 24th profit alert. Uber Technologies has tanked further with today's market drop, leaving our long puts at over 125% profit. Your 125% GTC profit stop should have taken you out of your trade by now. If you're still in, it's time to cash out.
Yeah, so Jan 24 was right around here, down here around 35. We had put that trade on before then, and we saw that, we had that trade dropping in. And what was happening was, it wasn't so much the price we were looking at. We were coming into an area of support, but we were watching this volatility start to, here comes a surge. We jumped in. In this case, we jumped in with put options. And as you can see, a couple of days we went almost nowhere, and then boom, and then dropped down in here. And this was the area where we got the exit signal. So we got out of this thing pretty close to the lows. I mean, it got down as low as below 33. We didn't catch that bottom. That just doesn't happen. We didn't catch the top when we sold. We're getting this area right in here, and the surge is telling us to get into this trade. So next.
Next is up. The final one that I have for you guys here today is the Halliburton January 21st profit alert. Cash out your HAL gains ahead of earnings. Action to take is to sell to close. We could read it on the screen. We have a whole bunch of numbers right here for a limit price of $255. Tom, to the charts.
Yeah, so here's Halliburton, and the move we had was a really nice one. It moved up into that earnings report, and there was the sell to close, and it moved on up right before that earnings report. Yeah, it jumped afterwards. But that's not what we're here for. We're here to get in and get out and kind of scalp that event to somebody else. I want to mention one more, Eric, that everybody in the room knows. Last week, I showed you exactly how this works using ExxonMobil. We used that as a trade idea, and I believe that actually had a 160% move from the time that we discussed that. That was last Tuesday to the most recent Tuesday, which was yesterday. Getting out of that trade. So, I showed you exactly how surge strike worked with a trade idea. And I've got another one for you that we're going to discuss here in just a few minutes. But this is basically how it works. So, Eric, what do you say that I show them a little bit of the software and kind of show them how this whole thing is put together?
I think that's a great idea. And a little bit, we have to let everyone know how they can get into Surge Strike and what we have going on over there as well. So let's make sure we make time for that too towards the end of the show.
So let's talk about that right now. If you're interested in getting into Surge Strike and being part of our membership, phone numbers on the screen, links will be on the screen. We'll put some information right at the top of the screen there for you so that everybody can find that if you're interested. Also, the software I'm going to show you is something that we offer up to our lifetime subscribers. So lifetime subscribers get a lifetime of benefits with Operation Surge Strike. But what I decided to do, because I own my own software company, okay? In fact, Eric, the reason we started our own software company back in the 90s, this is how far back it goes, all right? I found my programmers out on one of those, here, I'm going to go old school. Remember those old news groups? Remember the news groups? Can you go back that far? Miscellaneous. It was they were news groups, and you had to actually have a news reader. I mean, this is prehistoric internet time. Oof. And I would go scouring the news groups, and I found this miscellaneous.invest. miscellaneous invest and dot options. And I found these guys, these NASA guys. I found these guys that work for NASA and Raytheon, and back in the 90s. And I said, hey, and they were toying around with an option piece, and it was very small. And I said, I have this and this and this and this. And, Mike and Jeff and Joe and all the guys that are with me said, well, you know what, if can I use the tool set? Because I have some stuff too that I use. And we actually created this off of our own strategies. And then we started having folks like our partners, all right, some of our partners saying, well, can you create a scan for me, et cetera? So what's happened in the last, golly, I mean, we're coming up on 20 years now. That's, 18 years now since, my programming team's been around. They haven't left, right? They know a good thing when they see it. Anyway, we've got a piece of software out here, and we've got this, this Surge Strike software. I'm going to bring it up right now. So this is the results as I came in and looked at this morning. And so what we do is, I have these ranked, and I can rank these a number of different ways, but I have them ranked by what we call that initiation point, all right, or the day to get in, the buy date. And so I see Corvo on here. There's Meta's on here, but these are old, all right. These first three, I wouldn't even look at them. They're, in fact, the surge is the surge on the first three gonna happen, all right. It's gonna happen today. The height of that, so those aren't even playable. I went back and look and had those as past examples. I even mentioned yesterday on the program that if you wanted a quick surge, that Facebook/Meta looked like a very interesting one-day trade. Talked about it on this program yesterday, and those call options are higher today. In fact, they were a lot higher on the open this morning before the sell-off in technology. But you go along here, and I see Disney popping up, and I see CVS popping up, and I see, let's see if I can find some other ones that really make some sense. Newmont Mining is one that, we could look at later in the month, all right, maybe the middle of the month. These all have events that have happened over and over and over again. And for Disney and CVS, I noticed that they are bullish events. And I noticed that they have 75% accuracy over the last year, looking at the last 4 earnings reports. And then way over here on the end, all right, so this part over here on the end, this is the important part. This is the average move that Disney has made on its call options. This is the average move that CVS has made on its call options. And I could scan along here, and I could see, I'm looking for, wow, there's 152% average move on that trade, all right? So these are what we offer up on a regular basis. We're coming out with a good, I think, 3 or possibly 4 trades a week right now in the sweet spot for our Surge Strike members. But I mean, take a look at this. There is, how many trades have I got? I got 18 possible opportunities that Brutus is serving up for us right now. And so I'm going to take one of these opportunities here by the end of the program, Eric, and I'm going to go forward and show everybody my trade idea of the day, and it's going to be based on one of these 18 stocks.
And Tom, this is stuff that's going to be going on in the room a little bit later on, correct? So that's how
we're going to be doing some high. Yeah, we're going to be doing some high probability stuff in the middle in the room later on.
Okay.
But our Surge Strike members are invited to that. But we typically talk about Brutus on Tuesdays. We go straight into Brutus on Tuesday. The thing is I didn't have time to mention this yesterday. So I want to show folks a little bit more, kind of open the hood a little bit more on Surge Strike and what we're looking at.
Generous man.
And then I've got all this data when these events are happening, whether it's going to be after market close, AMC, or whether it's going to be, the BMO before market open. We've got the earnings dates on each of these. We got win percentage rates. And then here's where codename Brutus goes to work. What's the average implied volatility change? All right. What do the options do as far as changing? How's that theta decay happen? Because this is typically a negative number, but look at this. Here's one that actually over the last 3 of the last 4 quarters, in fact, actually 4 out of 4, we've seen volatility. We've seen time premium go up. Imagine that. I thought time premium was supposed to go down if you bought options, but there are certain times of the year where the volatility reverses itself going into these events. And then we've got that return on average, and we've got those ROI percentages and what happens, what not just the average, but what happens every single quarter. We have all this data available to us. All right. And it serves it all up for us. That's what it does. And in fact, if you really want to get crazy, Eric, we go in and we can look at it this way. Here's the last 4 trades for QRVO, 7 calendar days before earnings. In fact, 7 is not a lucky number. It's a start. And what we do is we then go in and we have Brutus optimize each specific stock, and it tells us the absolute best day to get in, that absolute initiation day to get in, and the absolute initiation day to get out. But if this, we're looking at QRVO, it shows me exactly how those have performed. All right, if I'm looking at Facebook, let's take a look at Facebook for a moment. Here's FB. All right, so back on October 2021, this had a small loss. All right, the actual call options had a small loss, but look at July 2021, 215% gain. All right, look at April 2021, 1.75% gain, so really just above break even. But then here's another 26% gain for a year ago, so 3 out of 4. Then I come along here and I look at LNC. LNC, the last 4 quarters, Brutus picked winners. 68% winner, 7% winner, 30% winner, 11% winner. And these are on the options. All right. Here's Pfizer. And we're going to stop here at Pfizer because Pfizer is going to be my trade idea that I'm going to be serving up to everybody in about 10 minutes. So, Eric, we're kind of down around the last quarter of the show, the last 15 minutes of the show. Instead of waiting until 2 minutes before the show, I thought we could start now. Let's do some chart requests. So those of you who are on Monday Morning Live, give me your favorite stock that's optionable. Let's analyze it. And I'm going to analyze it like Brutus would for potential surge strikes. And also, if you're with us on YouTube, hey, feel free to throw your favorite stock in as well. I'll be going over to the YouTube streamer as well to see if any of you that are watching us on YouTube have a stock you want me to run down and look at. And we will start on Monday Morning Live. So, Eric, anything out there that we want to look at?
Yeah, Good Morning wants to look at Mara, and I'm really happy because we have a whole bunch of them coming through right now. So we have,
and you can see the high ran up to almost 150. So there was a 50% surge on this as it moved lower. The right trade on this side would have been on the put side. But look what's happened. The tide rolled in. The tide came back out. Mara right now is just having another one of those days where Bitcoin has pulled back a little. It's had a nice advance here for the last couple of days. It's giving a little bit back, and Mara's giving a little bit back with it. All right, but that's what we see right now with surge. And if you come down here, you can see the volume surge that came in too. That came in at the end of January, and now the tide's kind of rolling back out from the last week of January to the 1st of February. All right, Eric, what else you got for me?
Let's take a look at, we have Riot coming through from Abe Froman.
All of these. Abe Froman, is that the Sausage King of Chicago?
Like Froman better than Froman.
Mr. Froman, this is Sergeant Peterson, Chicago Police. What movie am I referencing? Somebody please tell me. Riot Blockchain, and we're right back on the internet bandwagon again. Surge also with Marathon Patent happened to Riot. Again, that was because of the big push down in Bitcoin and in Ethereum. And since then, we've had the tide go back out. A little bit of a move up again, same thing. You've got Riot Blockchain down there, $14 stock. Guys, Riot's kind of like one of those contango ETFs. It's not going to move up as fast as Bitcoin, but you can be guaranteed it's going to go down faster than Bitcoin because it trades or it plays off the asset. Now, in order for Riot to have another one of those super moves that gets it back above 40, where do you think Bitcoin's got to go? Bitcoin has got to get back above 69,000, get to 70,000, 75, 80, and then all the folks that pushed Riot up the last time will then push it up again. Eric, what's next?
Yeah, I'm back. I got another one right here. We want to see PZR. Would like to check it out.
PZR.
Yeah, what do we have?
PZR. All right. No, I don't have anything on. I don't have a PZR.
All right. Well,
No.
then let's choose another. How about Let's try FCX, Tom. Figures I choose the one that we can't grab, right?
Yeah, we have
Sorry.
Freeport McMoran, and Freeport McMoran's got their earnings are behind them. So if you take a look and see what's going on here with Freeport, now I'm going to analyze. I can analyze this one a little bit differently, but we have a way of doing this. If I go to, let me grab something real quick. Let's go ahead and go. I'm going to go sideways here, Eric, because this just brought up something very interesting. I have so many things I can do. One of the things I can do is go into what's called earnings effects, and I can put that particular stock in there. So back again, FCX is the symbol. So if I go in and type in FCX and click search, now right now it's going to show me a couple things on here, and it's only showing me the last couple of earnings. So what it shows me is that it's before and after, what we call before earnings date or event date and after event date. We've seen Freeport drop on average of 5%, 2% in the last couple of quarters. Not enough data for me to really call it a surge strike, but it's starting to create, and we're starting to pull that data for FCX. You can see what happened. That, here's your earnings. Here's what happened before the earnings. Here's what happened after the earnings, down, down, down. So, we're going to catalog that. And if we start to see a pattern with FCX, we're definitely going to be looking at it as a future event. What's our next stock?
We got one that is possibly coming into earnings from Sharon NOK. She's saying, aren't earnings coming up?
NLK.
NOK. Oh.
NOK. Nokia. Okay, so let's take a look at Nokia. And you can see here, Nokia 2 ran with the herd, took it all the way down. We have earnings coming out in Nokia in a day. This is perfect. All right. And then I'm going to jump to the YouTube group for one or two of those. So let's look at Nokia real quick. Look at the surge coming in on this one. All right. So I want to go over and look at my earnings effect ranker and see if I can find something. And what I'm going to do is I'm going to go in and type in NOK. And I'm going to go to price change best before for earnings. So the last 4 earnings, what did the price do, and was there a pattern? And you can see here, this is why it did not show up on Surge Strike. You see this area here? Last quarter, it dropped 4% before earnings. The quarter before that, it went up 2% before earnings. Quarter before that, it went up 17% before earnings. And the quarter before that, it was down 4%. So this is not a pattern. This is a 50-50. Got it, Eric? One quarter up, one quarter down. All right, we're flipping coins there. How about the IV? What did the implied volatility do? What did the options do before 4 earnings? All right, well, even they were kind of weird. 11 up, 8 up, 37 up, and 40 down. So I like to see all these numbers going in the same direction, all right? Or at least the largest number not having a minus behind it. So this is stuff that's coded into Brutus. All right. So, but the thing we can do is that when we see something like a Nokia, we're definitely seeing that at least in the last week, we've seen implied volatility jump up. Now it's coming down. It looks like there's some people selling premium ahead of this earnings report. And we'll see what ends up happening. Now, the earnings report's not today, it's tomorrow. So we may see that volatility kick back up again tomorrow just before earnings. But this is typical. We see the earnings, we see volatility, we see option premium getting more expensive as we get closer to an earnings report, and then it dives off after that report. Now I'm going to jump over to YouTube and I'm going to look at MasterCard because MA is also coming up. Now MA has its next earnings in 85 days. Now look what happened with the earnings here. You see that that big rush as people rushed in to buy call options if they were bullish and buy put options if they were bearish. A couple days later, MasterCard's earnings come out, stock jumps, and all of a sudden now we're seeing that surge strike move. We're seeing the price moving higher. Options are getting cheaper. This one looks like and momentum. So momentum carried it to on the day after earnings up to a low 380s. All right, momentum seems to be carrying it more, and I see this as a $400 to $410 move before really 410. I see a $410 price move on this before we run into any headwinds. Look down here, though. This wasn't like a huge volume surge. Volume's already been high, 5 million shares a day on average. And then what happens? It goes to 8.5 million the day the earnings come out. So there's not a lot of fear and greed going into MasterCard, just a lot of momentum carrying it out of earnings. And then finally, I'll mention this, Eric Van de Zande. I had a buddy of mine, Dave and Todd Van de Zande. I grew up with down the block from me. We were kids running the block back in the late 70s, early 80s. I remember the Van de Zandes very well. Eric says Ferris Bueller was the movie, and he's absolutely correct. So Eric, and I'm pulling that off of YouTube. There was so much chatter going on Monday Morning Live. I couldn't see it going by. It was moving that fast. But yep, Ferris Bueller was the movie I was talking about there, guys. Hey, let's talk about my trade idea for the day. So I mentioned going over to Brutus, and we were talking about Pfizer. Something about Pfizer that interests me. In the last 4 trades, it's had 3 winners and 1 loser. And it had a winner even when, in the last quarter when we were seeing downward pressure happening in the drug stocks here in this last quarter. But it had almost a 10% option return. Quarter before that, 70%. Quarter before that, 146%. It did have a 40% loss around this time last year. So we're coming into an earnings date for Pfizer. Let's bring Pfizer up on the chart. So PFE is what I'm going to be looking at. And you can see by the chart that Pfizer's options, they're not on the highest that they've been, but you know why? Earnings are in 6 days. The earnings don't come out until the 8th of February. Now, where does the 8th of February fall? What day does the 8th of February fall on, Eric? So
that's going to be,
the 4th.
Yeah, it's a Tuesday.
Yeah, it's a Tuesday. So what we have to look at is we have to get an idea of when this thing reports earnings. See this BMO right here, Eric? That means it reports before market open. That means if I get into this trade today, if I decide I want to do something with Pfizer today, I need to be out of it by the close of the 7th. Because by the morning of the 8th, the news is known before the market opens. I want to sell that event. I want to get out of that thing. So if I'm looking to get into it, what am I looking to get into? Well, buying calls, selling calls. Buying calls pretty much now, selling calls right before the earnings date. Buying calls, that's what's happening, what's going on with Pfizer right now. So you want my trade idea for the day? My trade idea for today is to look at the options that expire next week. All right, next week is the expiration is the 11th, I think. Let's tell you what. Let's find out. Let me bring over a screen. So let's show you how this is all set up. There's my Schwab screen. Got it all blown up so everybody can see it. PFE. And then we're looking at call options, right? So here's the calls for PFE. Let's bring this up into view so everybody can see it. Now, if the earnings are coming out on the 8th and I need to get out on the 7th, the 4th, these are this Friday's options for Pfizer, they're not going to do. The reason they're not going to do is because this is way before the earnings announcement, and we don't have all of that factored into this week's options. We don't have that surge in option volatility. That's not in this week's options. It's in next week's. So we got to use the 11th. And the 11th, the 53 calls right now are 176 by 180. So that's a nice tight spread, right? So here, if we're buying a call, we're doing what's called buy to open. And if I look at this, and let's say I get this at $1.80. All right, so I'm going to put $1.80 on here, and then that's a limit order, so that gets filled or it doesn't get filled, and you flip that back and forth. But anyway, so that's how you'd place this. This is a buy to open order. Now, I want to show you one more thing. Let's put this right there. All right, let's put that right there for a second. Because, Eric, what we also got to do is we got to look at, if we get into this trade, when do I get out? Well, I'm going to have 2 areas of getting out. One is going to be by the close of the 7th, And the other would be if we go up and we hit the average move. So what's the average move on Pfizer? Let's go take a quick peek and see. So over here, you've got a move that says 46%. We could round that up to 50. We get up to 50%. So if my options have a 50% profit, then I could get out then. I could go ahead and put that in. So how that would look is if what's 50% of $1.80? 45 cents, right? No, 95 cents. Excuse me, 95 cents. So I could put if I'm buying this to open at $1.80, I would maybe look to sell to close. This is an idea, guys. This is not a recommendation. Just showing you how this whole thing works. Oops, 2.75. So that's a 2.75. That's going to have to go in as a good till cancel because that's probably not going to get filled today. But if we get a move up in Pfizer, if we get a lot of people kind of cramming into those call options and push that option a little higher, there's a 275 get out. All right. Now, if that doesn't happen, okay, and you're coming into the 7th, okay, to show you one more thing. We could go in. There are brokers that allow you to go in and create advanced orders. And one of the really cool orders that I like is what's called a contingent on time. So I could say, you know what? I'm either going to get filled at this limit order, or what I can do is I can do it at a market order. Contingent on time. Well, what time? What day? February 7th by, let's just call it, say, 3 p.m. So if you don't hit your limit, you can always on Thursday go in and say, all right, win, lose, or draw, I want this to get me out. And what happens is it's set February 7th at 3 p.m. This is now sent as a market order at that precise time for the best possible price. All right. This is the stuff we do, guys, with Operation Surge Strike. You want to be a member? Come and join us. You got a phone number on your screen. I'm sure we have a link there somewhere. Come join us, guys. We have a lot of opportunities for the month of February. Thank you all very much. Have a great rest of your day. For those of you that are joining me, I'll see you in a half an hour. Otherwise, we'll see you again here next week. Same time, same channel. Take care. Bye, everyone.